Good morning from our world headquarters in New York. I'm Manus Cranny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
President Macron touches down in Tel Aviv, says he'll call for a revival of peace talks between Israel and the Palestinian nation Hamas. They released 2 more hostages. Bombers are ditching their views. Investor Bill Ackman says he's covered his treasury shorts, while PIMCO's Bill Gross says he's buying short-term freight futures in anticipation of a recession. And European bank earnings, they're in full swing. Barclays lowers its guidance, while UniCredit lifts its revenue goals. Novartis also lifting its outlook. We catch up with the CEO later this hour. A very good morning to you. You would have wanted more bang for your equity buck on the back of 30-year bonds dropping by 21 basis points yesterday. That is the question you need to ask yourself. Yes, we're back in the green, but the S&P 500 closed for the 5th session in a row on the downside. Why are equities not performing better on the drop of 21 basis points in 30s and over 19 basis points in 10s? Because they're frightened as heck about the reality of recession. And, of course, it's the Bill's great adventure coming to an end. Danny will take you through that, but that's about preparedness for something much tougher in the U.S. economy from Bill Gross and Bill Ackman. Europe is down by 14 ticks this morning. Again, volatility there. We're on the verge of wiping out 2023 gains in the European markets. We're knee-deep in this earnings season, but Goldman Sachs warned that the risk premium, there's not enough cushion for Goldman Sachs in terms of the risk premium. And if this recession and slowdown comes, as is suggested more and more by some of the big beasts and veterans of Wall Street who are gathering in Saudi Arabia today, if it does come, it could be more brutal for Europe. I put the FTSE in, we're down by 0.3%. Barclays is the laggard here. Investment banking revenue missing by over 5%. That lags Wall Street. They're getting ready to cut their UK guidance. They're flagging cost cuts. So Barclays, at the bottom of your screen, again, going for structural changes at Barclays, and it leads the FTSE 100 lower this morning. It is the laggard by a country mile in the UK. Danny.
Yeah, and our reporter Jan Henrik will join us in just a moment's time on that story, Manus. Look, the past 24 hours, as Jim Reed over at Deutsche Bank says, have been all about treasuries. It's been a roller coaster ride, and given the ride we saw yesterday, pretty calm today. We're down by about 2 basis points on your 10-year yield, hitting 4.8% at this moment after going up to 5%. I'll talk about the bills in just a moment. Dollar also soggy this morning. Steve Englander over at Standard Chartered saying that compared to what the dollar should be trading at, we're down by about 2% based on his expected model. One currency dropping like a rock this morning, that is the euro, after weaker PMI data out of Germany and the whole of the euro area. Finally, man, it's got to put Bitcoin here. It's up another 8% at one point, hitting 35,000 over some optimism around a spot ETF. We had another ruling in the grayscale case, overruling what the SEC said to them, that they should be able to have an ETF. This was expected, but we're all still very excited. Okay, let me get to the bills, Manus. Bill Ackman and Bill Gross, both of them tweeting yesterday, a couple hours, shall we say, after the 10-year yield hit 5%, which happened about 24 hours ago. Bill Ackman saying we covered our bonds short. There's too much risk in the world to remain short bonds at the current long-term rates, while Gross says that he is buying SOFR futures, again, betting that rates will be lower than where the Fed has it. But, man, this is kind of the crazy thing that I'm having a hard time wrapping my mind around, that you have these two bills able to move a $24 trillion treasury market. Was it them, or was it just the 10-year hitting 5%?
I think possibly we would give them just a little bit too much power if we said that they were responsible for the entirety of the bond move. I think, Danny, you reflected very well. We looked at some of the headlines coming from Davos in the desert, as it's known, or the PIF gathering. Noel Quinn saying we're at a tipping point on fiscal deficits. This plays into the narrative of many of the anxiousness and the vexation of the bond traders. And then you look at Larry Fink, your friend. Of course, you're going to need to raise rates further. And that is perhaps the antithesis of what the bond market is saying to us at the moment. The one thing is for certain, the equity market is not convinced that these bond markets will not take another run on the upside. Danny, let's reflect to one of our main geopolitical stories. The French President, Emmanuel Macron, has arrived in Israel. It's the latest world leader to travel to meet the Prime Minister, Benjamin Netanyahu, following the Hamas attacks. Bloomberg's Oliver Crook is in Tel Aviv. Oliver, again, another leader arrives. He will undoubtedly affirm the support for Israel's right to protect itself. But where are we in terms of the overall diplomatic front? Good morning.
Yeah, as you say, Manis, he just entered a meeting just under an hour ago with Benjamin Netanyahu, and he is here. He arrived on the tarmac a couple hours ago. And as you say, there were going to be that affirmation of the support for Israel, the total condemnation of terror. But then also what we understand is that Macron is going to bring forward some of these discussions about peace potentially and talk about the two-state solution. And apparently, according to Elysee, will talk to Benjamin Netanyahu about the West Bank settlements, which is not something we've heard very much talk about publicly. We should also say there was another interesting diplomatic development overnight, which is that the Chinese foreign minister spoke with his Israeli counterpart. That is the highest level discussion we've had between the Israelis and China since this crisis began. In that call, apparently they talked about the Chinese, about the right to defend itself, Israel, also espousing sympathy for the Israeli people, but also spoke to the Palestinian counterpart about the sympathies there. However, we also understand that Wang Yi, the Chinese foreign minister, in a previous call with the Saudis, had said that the Israelis have gone beyond what is allowed by defense, and also that they had to stop its collective punishment of Gaza. That from the Chinese minister. We've heard from Xi Jinping also calling for a ceasefire. And of course, Manis, critically, the context here, the broader implications with the U.S. backing Israel so firmly, and of course, the issues that exist between China and the United States.
Oliver, we also had Hamas releasing 2 elderly women who were among the hostages taken. There's been lots of talk of a ground invasion delayed in order to continue those talks. Where do we stand on it?
Yeah, so as you mentioned, 2 elderly women that were kidnapped, taken just about 2 kilometers in a kibbutz just from Gaza. We understand that their 80-year-old husbands are still being held. Again, Hamas has released them with Qatar and Egypt running as the sort of intermediaries to negotiate that. And afterwards, Biden spoke with Netanyahu. They discussed hostages. They also discussed aid, which is a key part of all of this. We understand 35 trucks entered Gaza yesterday. That is the greatest number of trucks that have entered since the crisis began. Still very shy of the 100 that the UN says is required. And of course, the other thing that they talked about was the U.S. deploying more military support within the region, which they said they're going to do. Again, this is all down to deterrence and not getting Hezbollah and Iran emboldened.
Okay, Oliver, thank you very much. Oliver Crook on the ground in Tel Aviv. The World Bank President Ajay Banga has warned of the added risk of war to a fractured global economy. This was at the FII conference a little bit earlier.
So much going on in the world, in geopolitics, in the wars that we are seeing, and what just happened recently in Israel and Gaza. At the end of the day, when you put all this together, I think the impact on economic development is even more serious.
So let's carry on the conversation now in regards to earnings. I mentioned at the start of the show, Barclays shares slump, missing the estimates. It's the investment bank lowering the guidance for the domestic business for a second consecutive quarter. It's also signaled plans to reduce structural costs in the future. What does that mean? Jan Heinrich is with us. Jan, good of you to join us this morning. The market doesn't like what it hears. The investment bank is lagging its US peers. Is that the sword of Damocles for this earnings report card for Barclays?
Yeah, I would like to play devil's advocate a little bit, because if I look at these results, there are kind of two hearts beating in my chest. I don't feel banks always need to be that profitable. They need to be well capitalized, and they need to generate capital. And Barclays is doing that. And they also have a pre-tax profit of $2 billion. The trading results in fixed income are actually, almost on a historic high. The last quarter they had such an income was second quarter, and that was a record. Quarter. So actually, shares are slightly coming back. I feel it's not that terrible. But what it tells you, obviously, the guidance revision is really bad. That's the second one, the second consecutive on net interest margin, which tells you the story of UK banking. That's an important income stream for Barclays. That basically the benefit of higher rates is fading. and the deposit beta is very high for UK banks and very high, especially for Barclays. So that's an issue. Then trading results are weaker than peers. That's the other issue. But I think the main point is Barclays is already undervalued, and the market is expecting a strategy update, and it's losing patience. And this is exactly what these results show.
Jan, it's 5 a.m. in New York. You can't play devil's advocate. It's too early for that. You got to wait until at least at like 10 a.m. or something like that. Okay. So UniCredit. I don't think I'm going to say too much because I don't want you to push back on me. Just what do you think of those earnings? I feel like you're out for blood today, Jan. I'm nervous.
I don't care today about UniCredit earnings.
Why is that?
Because I think that Andrea Ocel has done one thing right, and that was basically buying back stock. And that gives him an edge. It's probably over kind of all his European banking peers. It's probably the best performing European banking stock. And then the second thing, UniCredit is still making money on lending, and it's more geographically diversified than, for instance, a Barclays, and that is paying off right now. Maybe for Barclays, the point is, look, you have a US business, a big one. If you are in the biggest economy in the world with higher rates and all of that, then you really have to make sure you have to make money on that.
Right. Yeah. Fair enough. I guess someone cares, though, because shares are down. Yeah, Manus?
I was just going to say, you're going to get a brutal telephone call. I don't care about UniCredit. I can just imagine Ocel stomping around the office. I don't care about UniCredit. But on that front, it is. I mean, he is sort of, he is fairly vainglorious at the moment, isn't it, relative to his peers?
Yes, and I think that's because he has been using every penny of his excess cash to buy back stock. He is very good in managing costs. And now he even, you saw this deal he did in Greece/Romania. That's probably not that exciting. It's not what what the market or what everybody is talking about. Andrea Ocel, the biggest FIG deal maker of all times. And now he's doing a smaller-ish deal in Greece. But, these are small pockets of growth. And it's also, now after cutting costs, he has a little growth story to tell. And that distinguishes UniCredit from literally, maybe apart from UBS, every other bank in Europe.
Jan, great to have you. Jan-Henrik Forrester, whether or not he cares about earnings, he does care about these banking stocks. It's Bloomberg senior reporter for investment banks. All right, let's get to some of the other top stories that are trending on the terminal this morning. As I mentioned, Bitcoin, it's extending its rally. It's hit $35,000 for the first time since May of last year. The cryptocurrency was fueled by fresh demand over possible ETF approval in coming weeks. Bitcoin remains below its pandemic era 2021 peak of almost $69,000.
The BOJ is on bond watch. The central bank said it's monitoring yield movements to determine whether they'll adjust their yield control program at the next week's policy meeting. This comes after announcing an unscheduled bond purchase operation to curb rising yields. That was earlier today, Danny.
And will Country Gardens miss bond payment trigger credit default swaps tied to its debt? That's the question posed to the Credit Derivatives Determinations Committees. China's former top builder has remained silent after announcing that it didn't believe it would meet all of its offshore payments on time last week.
Well, coming up, we're going to speak to Derek Halpenny of MUFG on the resilience of the U.S. economy. And we'll dive into the Novartis numbers a little bit later on with the CEO, Vasant Narasimhan. He joins Danny and I this hour to talk about the numbers and the future of Novartis. Good morning from New York and London.
This is Bloomberg Brief. I'm Danny Berger in London. Manus Cranny is in New York. Manus, we started the show talking about the Bill's bets on bonds, that they're abandoning shorts, but I specifically want to get into Bill Gross's trade itself because he's buying SOFR futures. If we look at these contracts at the moment for March 2025, it's pricing 4.3% of a Fed funds rate. In other words, 100 basis points of cut. So by buying this thing, he's betting that there's going to be more than 100 basis points of cuts by March 2025. Joining us now is Derek Halpenny, Head of Research for Global Markets, EMEA and International Securities at MUFG. Derek, great to see you. All right, is that a trade you'd want to jump on? Because that does seem to imply recession, as we were just talking about during the break, if you're betting there's more than 100 basis points of cuts.
March 2025, I think it's very feasible for sure. I think over that period of time, it's more likely than not that there will be a period of recessionary conditions. And let's not forget, before the most recent summary of economic projections, the previous set, the Fed were calling for 100 basis points next year. They've cut that to 50. So they're still calling for 50 basis points of cuts next year, and they've got a very rosy scenario. So I think, even a slightly more negative scenario, a little bit lower inflation, and you very easily get to a scenario by March 2025 that they've done more than 100 basis points of cuts for sure.
Good morning, Derek. Good to have you back with Danny and myself. It's good to see that the later time start got you out of the bed and up the road. So welcome. It's good. I was up at 2:30. So what does that do? What does that do to your call on the dollar? You said this is, 11 years in the run. The dollar bull run has lasted 11 years, the second largest scale ever. It ended last year. If you take what Gross is doing in terms of positioning, he's going for rate cuts. Does that make you want to double down on your bearish dollar position? Or if we are in a recession and we have a heck of a lot of geopolitical angst, wouldn't I want to be long dollar?
Yeah, there is that offsetting risk, of course, but I think you have to take it in the context of the starting point. And if the starting point of some form of risk off could result in an initial bout of US dollar strength, obviously it depends what it is and the scale could be different, but then you're in a situation where you have this substantial amount of potential monetary easing that would come from the Fed. And I think in the context of that, you can still see a picture in which the US dollar weakens. And, I have a window where I think the dollar could strengthen further, although I must say over the last couple of days, the resilience, in particular in euro dollar, has been pretty remarkable. And, given where we are today compared to a month ago, all of the variables that you look at, treasury yields, bund spreads, BTP over bund spreads, natural gas prices in Europe, they've all moved in a direction where euro dollar should be considerably lower than where we are. So I think something is beginning to shift, and maybe it's the early doubts about the resilience of the economy.
Yeah.
We've had some comments from Fed officials to suggest that.
But could I not just say everyone's long dollar right now? It's just positioning. That's why we haven't seen a bigger move to that side.
Well, I think it's definitely partly that. And I think when you get down to kind of the 105s, just below the 105s, if you go back to breaking that level last year and going from 105 to 95, we had a catastrophic type scenario being priced of lights out in Europe, natural gas prices through the roof, deep recession. And unless you get some kind of scenario that needs to be priced again similar to that, I think mild recession in Europe, we're there. The big story from the relative macro is potentially what's going to happen in the US. From growth of 2.5% to potentially down to close to zero, we think, by the middle of next year. And that's where the real story from the macro side is going to come from.
I mean, if you got to 0% by next year, what would that... I mean, that would have quite a dramatic impact on risk, wouldn't it?
Again, it depends, Manus, not necessarily.
Well, if we're going for 4%, some people are going for 4.5% this week. Some people are saying to me 5%. The GDP now, is blowing away. So to go from 5 to 0, call me old-fashioned.
Yeah, but the consensus for Q4, it is, but the consensus for Q4 is dramatically weaker than what we're getting in Q3. So I think already the markets acknowledge that the strength in Q3 is not going to continue. And indeed, we've done some natural language text analysis of the Beige Book last week, and we pulled out all the references to the consumer, and it was the worst sentiment on the consumer since the onset of the pandemic in 2020.
I found my fact of the day. I'm going to flog that to death. I really am. Derek Halpenny's looked back over. How many Beige Books did you look back over? Anyway,
wow.
I'm mounting off them. That's my fact of the day. Derek, thank you very much. Derek Halpenny there at MUFG. Our guest this morning, the consumer is unwell in the United States of America, based on his analysis right here on Bloomberg.
we're going to see higher interest rates for longer.
You have a political, you have a monetary, you have a conflict type of environment.
We're sitting here with the backdrop, which I think we all acknowledge, of the aftermath of the terrorist attack in Israel and the events that have been unfolding since, and it's desperately sad.
Long term, I'm certainly optimistic, but I'm uncertain right now.
I'm generally an optimist. I think you'd be foolish not to look at some of these things taking place today in Ukraine, Middle East.
We will not see a hard or a soft landing in 2024.
There is the potential for persistent high interest rates and high inflation in Europe.
If you take the time horizon, the monetary policies that we're going to see and so on will have greater effects on the world. And you look at the world gaps, so it's difficult to be optimistic on that.
19 voices at the Future Investment Initiative in Riyadh there, Danny, of course. I think you said this, it's easy to spot who's the bond trader and who's the CEO. I mean, they're all there, aren't they? Noel Quinn, you got Ken Moelis is on the ground. They're all there giving us their views on growth. And Noel Quinn says we're at a tipping point on fiscal deficits.
Yeah, no, again, I love this because everyone was basically like, look, there's tensions coming up, but generally I'm an optimist, where Ray Dalio is just like, no, I'm pessimistic about the direction of global growth. But Manus, how about this headline for you? Schwartzman there saying that people from working from home didn't work as hard. Guess you can't work at home if you're at Blackstone.
Back to the office. Coming up, we're going to catch up with the CEO of Novartis in just a couple of minutes. Welcome back to Bloomberg Brief. I'm Manus Cranny in New York.
And I'm Danny Berger in London. Here's what you need to know. President Macron touches down in Tel Aviv, says he'll call for a revival of peace talks between Israel and the Palestinians as Hamas releases 2 more hostages. Bond bears ditch their views. Investor Bill Ackman says he's covered his treasury short, while PIMCO's Bill Gross says he's buying short-term rates, futures to be specific, in anticipation of a recession. And European bank earnings are in full swing, with Barclays lowering its guidance while UniCredit lifts goals for their revenue. Meanwhile, Novartis also lifts its outlook. Our live interview with the CEO is in just a moment's time. First, Manus, a quick check on these markets. It's almost as if the bond market was taunting us. At this time in the show, I think basically around now, 24 hours ago, we got 5% on the 10-year yields. We talked about it to death, and that's perhaps why the market decided not to play along and drop about 16 basis points over the rest of the day. Now we're trading at 4.8%. It's pretty calm given the roller coaster we've seen, down about 1.5%. Was it the Bills? Was it Ackman and Gross abandoning shorts, abandoning bearish views, or was it just 5%? Finally, giving us some ammo for duration hunters to come back in. Dollar, that drops. We're just talking with Derek Halpenny about the dollar's direction, about the limitations of how much more strength there really can be to come. One strength that has been very clear, Manus, it is Bitcoin. I feel kind of bad I have it on my board today and not you, because I know you love a little bit of Bitcoin. Up 8.5%. It touched $35,000. Again, this excitement around will we or won't we get a spot Bitcoin ETF?
Just for everybody out there, at 2:45 this morning, there was a close call whether Bitcoin would make it to a headline. But you're right, the bond market was taunting us. Why did the equity market not respond more respectfully to the implosion in bond yields? Those steepeners were aggressive that were put on. Maybe it is that cathartic moment of the steepeners being taken off. Equities are up by 0.4%. Again, we were down for 5 days in a row, so we're seeing a miniature rebound out there. There's a heck of a lot of VIX call buying going on as well. $25, $32 call spreads are trading at plenty, so there is a view that volatility is going to rise. There is a lack of conviction, though, in this equity market, given the size of the moves in the bond markets. To Europe, you're looking at clawing its way back, but you're looking at perhaps the 3rd month of declines as we go towards the end of October, wiping out 2023 goals. The PMIs this morning were ungenerous to sentiment, in the very least, in Germany and in Europe. You then pivot to the UK, down by 0.2%, and it's the banks that are under pressure. Barclays, we've just had a conversation with Jan Henrik. He actually feels that the story is perhaps a little bit more bullish than the market is reflecting. Barclays is down. They're cutting their outlook. A 5% miss on the investment banking revenue, and they're going to go for structural changes, Danny. But there's no doubt about it. The Bill and Bill's excellent adventure in the bond market is over. It was on X. It's official. Or was it the steepeners ran out of breath? Danny, good morning.
Good morning, Manus. Yeah, look, I spoke with Patrick Armstrong of Plurimi Wealth in the past hour, and he said it can't be these two schmucks. He didn't say that. I'm adding the schmucks adjective. That move a $24 trillion bond market. It's just attractive now. I mean, we've heard this from so many people. We heard it from Steve Major. If you thought 4% was attractive, then surely 5% on the 2-year yield, maybe 10-year yield, maybe that is a screaming buy.
A screaming buy. There you go. Well, the thing about it is whether we get one more run. Derek Halpenny from MUFG was very, very clear, by the way. He sees a dramatic drop in growth going into next year. The risk is that you drop to 0%. Let's shift gears a little bit and start to talk. We're deep in the weeds of earnings season. Novartis has given us their third quarter sales. That beat the analyst estimates, with guidance coming in line as the firm raises its profit forecast for the third time. This is the first report since spinning off Sandoz generic business. Joining us now to discuss the numbers is the CEO, Vasant Narasimhan, joining us from Basel. Good to have you with us. Do you know what went through my mind when I looked at this? I saw you 6 years ago, and you set off on a journey to change this company. How unshackled are you today with these numbers after the spin-off? Good morning, Vaz.
Good morning, Manus. Good morning, Danny. Great to see you both. You know, it's been a 6-year journey to transform Novartis into a pure-play innovative medicines company. We've done about $100 billion of transactions over this time. We created 3 global leading businesses, supported the creation of a consumer health business, the Alcon eye device business, spun off Sandoz into a leading generics company. And now what I see everyone is seeing coming through in the third quarter is Novartis as a pure-play innovative medicines, I think, powerhouse. And you see we were able to deliver double-digit sales growth, over 20% core profit growth, which really shows, I think, the business now really showing what it can deliver as a pure-play innovative medicines company.
What do you think, then, is the next challenge that you face on the horizon? Given you've pivoted to this pure-play model, what do you need to conquer next?
You know, for us, it's going to be delivering in our 4 core therapeutic areas. A big mantra now inside the company is focus, focus, focus. And we need to keep delivering strong pipeline assets and launches in oncology, cardiovascular and renal diseases, immunology, and neuroscience. And when you look at the portfolio of medicines that we have, we think we have 9 major medicines that have multi-billion-dollar potential that can deliver that growth over the coming years. We've guided to 4% plus growth and 40% core operating income margins out into 2027. And when you look at the performance of some of those growth drivers, we're really excited about the performance of our breast cancer drug Kisqali, our multiple sclerosis drug Kesimpta, the emerging performance of our Pluvicto prostate cancer medicine, amongst others. So I think everything's headed in the right direction, but of course we're going to have to consistently deliver on that pipeline and launches to be successful.
Look, the one hot button topic, and we'd like your views from a couple of different angles here, is obviously on the obesity drugs. I mean, the world is in a frenzy at the moment. You dropped one from development, MBL949. You talked about high risk and high reward. Where are you in that narrative in the obesity drugs? What comes next for Novartis? What have you got in the pipeline? How do you plug that hole?
Look, on obesity, we're taking a much more next-gen look at what could come in the future. We have early-stage research efforts looking at what mechanisms might support patients to impact obesity. And we really look at this from the lens of how can we impact cardiovascular disease and renal diseases, which are core to our long-term focus. But what I like to think about is, rather than chasing the herd into obesity, where can we deliver breakthrough innovation where we're really uniquely positioned? And that's in this whole new class of oncology drugs called radioligand therapy. It's in using CAR-T therapies to really deliver almost cures in severe immunological disease, which is remarkable, and continuing to be a leader in RNA therapeutics. These are 3 very large markets, we think $20 to $30 billion markets over time, that we can build and have a leadership position to really drive our long-term growth.
So you're looking perhaps past the frenzy that we see now. But Vas, just on that point, because Manus is so right, everywhere you turn, everyone is talking about these weight loss medications, to the point where even Nestle is talking about giving out products that complement things like Ozempic and Wegovy. What is the risk? Is there a risk in that, of this absolute madness we've seen around these products?
look, I think these medicines are really impactful, and these GLP-1 agonists have really delivered important benefits for patients across a range of different indications. But I think always we have to look at risk benefit. Nothing comes for free when you're giving these kinds of therapeutics. And as you go broader and broader, you inevitably will pick up safety signals. And also, I think one of the questions is long-term use. How will patients stay on these medicines? Will they lose muscle mass over time? Will there be impacts on cardiovascular risk because of the impacts on heart rate and other factors? So these are all things I think the next generation of drugs are going to need to address. But I think it's important also from a public health standpoint, diet, exercise, some of the fundamentals can't be lost.
Yeah.
There's nothing that really comes for free when you think about longevity.
No, I can assure you there's nothing for free. You've just got to do more miles on the treadmill or walking around New York. Look, we could have endless conversations about those drugs and the societal impact, but we're here to talk about you and your business. Roche does a $7 billion deal. The natural sort of generic question is, do you feel under pressure to do another deal? Let's dispense with that. Where is the market? Is it getting more expensive for you to do the kind of deals that you want to do, given the heat that somebody like Roche has turned up in the market? What is the deal objective for you? You're 6 years in. What do you want to... I'm not saying it's your swan song. You could be there for another 6 years. But what kind of deal do you want to do that sort of says, yes, I was here?
Our focus is on these bolt-on M&A deals that are within our core therapeutic areas that really build scale within those 4 therapeutic areas I talked about, or that give us a further technology advantage, like we did an early stage deal in the area of small interfering RNAs in these technology platforms we're trying to build. You know, when I look at the market overall, of course, the biotech sector is having its second year of really historic lows, at least the historic lows over the last decade. So certainly the valuations can be supportive of activity, but really we're driven by the science, and we need really, really strong science to make these bets. And I think it's critical to look very carefully at these assets and make the appropriate valuations.
Oh, man, see, I was looking for the tie of can we judge how relaxed Vas is dressed, depending on whether or not he's moving into biotech or not. We'll have to play that game next time, Vas. All right. Does that mean then, if you're looking for bolt-ons, that the era for transformative M&A for your sector, for you and your peers, are we far from it? Are you going to leave the bankers just waiting and hoping for those types of deals?
Well, the bankers will keep coming, I'll assure you of that. But, I think when you look at our sector over the long run, there really hasn't been significant consolidation in over a decade. And part of that is just the reality that beyond a certain scale, you don't get further scale effects from getting bigger in R&D or getting bigger in the commercial environment. Now, of course, policies could shift that would make that more attractive 5 years from now. But in the near term, I don't see consolidation events. I really see everyone trying to focus in, collect good assets from the biotech sector, focus on their internal R&D engine, and hopefully drive successful launches in the market.
Vas, really wonderful to catch up with you this morning. Please come join us anytime, whether earnings results or not. Vasant Narasimhan, there, the Novartis CEO. Now, speaking of the tech world, let's head over to the Bloomberg Tech Summit. It's taking place here in London. Anthropic co-founder Jared Kaplan is in conversation with Bloomberg's Brad Stone. The AI startup has been reported to be in talks to raise $2 billion shortly after Amazon agreed to invest up to $4 billion in the company. If you want to watch the whole thing, you can view the panel on LiveGo. Let's take a listen as we head to break.
We think that there should be kind of a race to the top on safer AI, more ethical AI in preparation for the fact that we believe there will be more powerful systems on the horizon. So I think the goal is for there to be competition in the direction of safer and more reliable systems. So to sort of make that concrete, we recently made a set of commitments, a responsible scaling policy, responsible scaling commitments about basically standards that we'll hold ourselves to as we build more powerful systems. So the current systems we have now, like Claude 2, we have information security, we have constitutional AI. We think that that's sufficient. But we're imagining systems that are effectively able to operate autonomously, a system that might be able to sort of install itself and run itself on new computers all on its own, or a system potentially that might be used by bad actors to say build or operate cyber weapons, other kinds of weapons. We all know that current.
This is Bloomberg Brief. You're looking live at the principal room. Coming up later today, an interview with GM CFO Paul Jacobson. That's at 7:30 a.m. Eastern, 12:30 p.m. if you're here in London. This is Bloomberg. Welcome back to Bloomberg Brief. I'm Danny Berger in London alongside Manish Cranny in New York. It's a big week of big tech earnings, the biggest week for all earnings. We're going to get $16 trillion worth of reports from S&P 500 companies. Microsoft and Alphabet, they'll be kicking things off after the market closed. And joining us now on What to Expect is Bloomberg's Alex Webb. Alex, let's start on Microsoft, because some of the headlines I see for What to Expect have been basically tepid sales growth. So where do we stand on things?
Yeah, I mean, as ever with these things, it's going to be the outlook that's important. The expectation is for quarterly sales growth below 10%, which is a slower pace than we've seen in recent years. But Microsoft has been going hard and fast into cloud investments to support this sort of, in inverted commas, AI revolution. Of course, it has a very close relationship with OpenAI. It's its biggest investor. So when we look towards the quarterly outlook, real attention is going to be on what benefits is it deriving from those AI investments? Is this sort of cake over eggs, or is it something that is really going to start to come into usage in the second half of this year?
Alex, good morning. Good to see you. So we'll also get Alphabet, owner of Google. Now, the thesis is that Google has a little bit more immunity than, let's say, for example, Meta or Snap on the advertising. Do you concur with that? Is that a consensus trade?
Yeah, and if you want to be in the business of selling almost anything at scale, you need to be advertising on Google. That's has decreasingly been the case across Meta's various platforms. It therefore becomes a little bit of a sort of leading edge bellwether on consumer sentiment. Do the brands think that consumer appetite is going to pick up? You start to see the groundwork being laid from an advertising perspective for the Christmas quarter, trying to get people to part with their dollars in the holiday spending. So any comment from Google that gives an indication of that has, of course, implications for Google, but a little bit of broader implication for the market as a whole. If Google's doing well, it doesn't necessarily mean that everybody else is going to be doing well, but if Google's doing badly, then everybody else in the ad tech space is likely to be feeling the pain as well.
Alex, thank you very much. That's Bloomberg's Alex Webb. Let's see what those numbers deliver. Will it add to the equity narrative after the tanking in bond yields? Well, from Silicon Valley to Washington, the House Republicans are trying once again, you got it, to choose a nominee for Speaker after the party's two previous candidates failed to secure enough support. Joining us now is Zach Cohen, our government reporter. Will the House elect a Speaker today? I mean, you must be bored with this question. The world is the world is now fascinated by the GOP, not just America. So will they choose someone today, do you think?
It's certainly been the only question we've been asking for the last 3 weeks since Kevin McCarthy was ousted from the Speaker's chair in Washington. House Republicans did nominate two different men before today's vote. Steve Scalise, the House Majority Leader, Jim Jordan, the House Judiciary Chairman. Both of them won the nomination, a majority of House Republicans, but failed to get that magic 217 number on the floor of the House, so the whole House, which includes obviously not just Republicans, but Democrats as well. And so House Republicans will go behind closed doors again today, try to find a third nominee. And that person, if they manage to find a broad swath of support from House Republicans, they could be elected Speaker as soon as today. But finding a majority, and not just a majority, but near unanimity among House Republicans for a Speaker nominee has so far eluded them.
Mandis, I don't know if this game made it across to Ireland in your childhood, but looking at the board reminds me of the game, Guess Who, where you have little pictures of different people and you say, like, okay, is it the man in the glasses? Is it someone with gray hair? I mean, there's quite a few people to digest, Zach. Who's actually in the running here?
I think the front runner at this point is Tom Emmer, who's the House Majority Whip, the number 3 in the House leadership, a Republican from Minnesota, a former hockey coach. He is seen as the most likely to win this nomination, just given the fact he's already high up in leadership. The one thing against him is he is one of the 2 Republicans that are running today that actually voted to certify the 2020 election. The majority of them actually voted to overturn the election results in favor of former President Donald Trump and his efforts to prevent now U.S. President Joe Biden from taking the White House. And so Emmer's vote on that, along with Austin Scott, another Republican who's running for Speaker, that has not exactly won the endearment of Trump's allies in Congress, on Capitol Hill, or broadly across the country. And so that could give some of his colleagues pause in supporting him.
Okay, Zach, thank you very much. Hopefully we'll get something to talk about. I'm sure there will be that at least come tomorrow. That's Zach Cohen of Bloomberg Government. Manus, a few earnings to work through. We talked about Barclays with Jan Henrik. Look, some disappointment there. The investment bank, their revenue miss, focus on restructuring, on reducing structural costs. On the restructuring part, there was a note from Jefferies saying that they might need to have their nth restructuring given these results.
Yeah, and then Andrea Orcel over at UniCredit, net interest income grows to over 30%, topping the estimates, raising its full-year guidance for the 3rd straight quarter. And then, of course, I know you've got Hermes in your sightline. No, the dollar is not sufficiently strong against the pound or the euro for me to buy you your Birkin bag just yet.
I was going to say Hermes earnings are in my sightline, but actually buying Hermes things, I'm not quite there yet. Look, strong results, Manus. It's clear that Hermes, at least for the time being, is kind of recession-proof. LVMH, not great results, but, good results from Hermes, despite the fact that neither I nor you are buying me handbags.
No, definitely not on your... Well, it's nearly Christmas as well. You never know. You never know what you get for Christmas. Then we've got Thanksgiving before then. I've changed my festivals. You're not up in luck here.
Oh, you're getting a Thanksgiving turkey, Manus. This is you are American.
I'm going to be on a plane to Vienna for Thanksgiving. Actually, I'm coming to see you.
Oh, never mind.
I'm coming to see you for Thanksgiving.
Yeah.
You can have me round to West London for supper. Yeah, thank you.
Perfect. We'll have a Friendsgiving. It'll be marvelous. All right, coming up, well, Manus is going to jet off to go set up with the surveillance team, so stick around. He'll be taking you through the next hours. But first, we're going to take a look at some of the market-moving events to watch throughout the day. This is Bloomberg. Welcome back to Bloomberg Brief. I'm Danny Berger in London. Manus Cranny is in New York, but he's run off to go set up with team surveillance. So stick around for the next few hours to see him. All right, let's get you set up for your trading day. French President Macron is expected to speak from Israel in just a few minutes. That will be at 6 a.m. Eastern. Then we're going to get some data, U.S. PMIs. Those come out at 9:45 a.m. Eastern as we kick off the final quarter of 2023. Then it's the big tech earnings. That will kick off with Alphabet and Microsoft. Both of them report after the bell. Speaking of those, let's get a quick read on those prices in the pre-market, because Google and Microsoft, they are slightly higher. Last I looked at the pre-market, there you go, up by about 1%. We are expecting some weakness coming from cloud sales in Microsoft this quarter. Alphabet, all about their ad sales. Are companies continuing to spend? That will be the big question for them. Again, those hit after the bell. The euro, that is a mover. Here and now, euro is weaker by about 1/3% versus the dollar. You can see a decisive drop just before 9 a.m. London time. What happened then? We got a bunch of PMIs that came out. You had France, some weakness there. You had Germany, again, weakness there. And then you had the entirety of the euro area. The interesting thing here, though, is even though that the euro is significantly weaker versus the dollar, the Bloomberg dollar spot on its own, that is little change this morning. It's something Steve Englander over at Stan Charter points out to say the dollar is neither reacting to risk aversion nor rate differentials. Perhaps we are showing concern about higher long end yields, not something you'd want to buy the dollar for. All right, that's it from Bloomberg Brief. The New York team and our very own Manus Cranny will take it from here. Surveillance.